Hi traders, hope you're doing well. Welcome to my video on the DDFX Major Trend Indicator, where I'm going to show you a strategy that you can use with this indicator to capture major trends such as this one for over 500 pips. I'm using the MetaTrader 4 MT4 trading platform here. This is a pound dollar 1 hour chart. You can use this strategy on any trading platform, any trading instruments, so Forex, stocks, cryptos, commodities, indices, etc. And any chart time frame. Personally, I stick to the 1 hour, 4 hour, daily, weekly, monthly charts, primarily due to the fact that they contain more price data and therefore find signals tend to be more reliable. That applies not just to technical indicators such as the DDFX Major Trend Indicator, but also price action analysis, support resistance, trend lines, candlestick patterns, so on and so forth. Okay, so as the name suggests, it's a trend indicator. So we're going to trade with the trend. As the old saying goes, the trend is your friend, which is great because we can capture big moves like these for hundreds of pips without needing to stress ourselves out trying to scalp a few pips here and there all day long in the 1 minute or 5 minute charts. You can use this indicator on intraday lower chart time frames like the 1 minute, 5 minute, 15 minute, if you like. However, I find that there's a lot of noise on those charts, and more often than not, you're just going to get whipsawed in and out of the market and end up paying loads in terms of spreads and commissions. I'd much rather take one good trade in line with the overall trend and aim to make a lot more pips. Okay, so the strategy is very simple. What we do is we want this indicator here to be red if we're going to sell, and we want it to be blue if we're going to buy. That doesn't mean that we buy and sell every time it changes color. For example, it changes to blue there, but you don't want to buy there. Why don't you want to buy there? Well, because we're in the midst of a downtrend. How do you know that we're in a downtrend? Because you can look at your chart. If you look at your chart, it will tell you the market is making lower highs and heading in a downwards trajectory. Okay, so what I would have done is once I've seen these lower highs here, okay, this is my indication the market is falling. Okay, and then that's confirmed when the indicator turns red here. Further confirmation is from drawing this support line here. You can see this held up, this trend line as a line of support. However, once it was breached here, okay, there's a big downfall in the market. Traders were watching this level, anticipating this, the lower highs combined with a breach of that trend line support. And there's only one thing going to happen, which is a continuation of this downtrend. The key is timing the entry. As I said, we don't just enter as soon as it changes color, we time our entry. How I like to time my entry is on a pullback. So pullback being, if I zoom in for you here, you can see this pullback here. There's a downtrend, the market pulls back, and then I'm just going to draw a level of support. Okay, that's my level of support there. I'm going to look to trade a breakout of this support level, as you can see here, and that's my entry into this downtrend. Indicator is red, pullback, breakout, simple as that. Stop loss above a recent high, so here around 25 pips, decent stop loss for the 1 hour chart, and a profit potential of over 400 pips. Okay, I'd move my stop loss to break even at the first opportunity, so perhaps when price falls down around here, I just put the stop loss at break even, and then as it falls down here, trailing stop above the high, so it falls down here above this high. As it continues to fall, I just basically trail my stop loss with the price just to lock in as much profit as possible. And if price does turn around and take us out, at least we've maximized the move as much as possible. And you can, of course, always look to re-enter. So when it comes to re-entry again, we just wait for the indicator to turn red. Okay, so let's say we're taken out here, or we exit manually when the market starts making these higher lows. And we're going to look to re-enter. Some may argue here is when it turns red, okay? But if we apply our support principles and wait for a pullback, there's the pullback, but you can see this level of support, okay? It's not till later on here when it's breached, and that would have been a potential re-entry there. The indicator is still red. However, I would argue that once you've seen a big move like this, you don't really want to sell at the low. You ideally want to get in up here somewhere. Ample opportunity to do so, and so many different trading instruments to trade in short time frames. You don't need to force trades or take riskier trades. If you did miss the initial entry, there's another pullback there. Just zoom in for you. pullback there and a breakout. The indicator is still red. As long as the indicator is red, you can see the market making lower highs. Okay, you can time your entry into this downtrend on breakouts. Another breakout there as well, another potential entry. Ideally, you want to get in early on one of these and just ride the trend as much as possible. Okay, as I said, I'm not taking entries every time the indicator changes color. I'm only going to use it as a filter for trend direction, which, to be honest, you can just do with some simple trend lines yourself, regardless. And the more you see this red, the stronger the trend is. So that can be a good way to keep you out of choppy markets when you see a situation perhaps like this one where it's just changing from one color to the other. That's not great on the eyes, but basically shows us a choppy market. So you, unless you're range trading, I'd want to avoid such a scenario. Okay, instead look for instances like this, and there's a lot of red, so we know it's a downtrend. You've also got your level of resistance here, market making lower highs. Okay, price actually has a breakout as well of this support trend line, which then becomes resistance. Arguably an entry here on that breakout, or you can wait for the pullback here. Okay, so it's red, red, get a pullback, breakout, red, 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 get a pullback, breakout, and two good opportunities to get in early on this significant downtrend. Even if you took the second one, you're still good for almost 350 pips on that one. Break even and trailing stop as well. Maximize the move as much as possible. Stop loss above the recent high, so around 20 pips. What I don't want to do is I wouldn't panic when price drops over 100 pips and say, oh, wow, you know, fantastic trade. It is a good trade with a good risk to reward ratio, but if you exit there, you just leave too much on the table. There's a lot more potential. I don't like to use a fixed take profit. I want to get as much pips as the market will offer. Okay, rather than rushing out of a trade. I mean, if we take a 20 pip stop loss 5 times in a row and we're down 100 pips, not even accounted for broker fees, spreads, commissions, it doesn't matter, because we know when we capture one big trade, one big trend like this one, we can get a trade for hundreds of pips and make back those losses and more. So in an uptrend, same principle applies. Look for blue, lots of blue here. Market is making these higher lows, so we know we're in an uptrend. Pullback, breakout. Okay, this is not the ideal scenario just because this is so choppy here. But we can still work with it, you know, if you just pick out your resistance carefully. Even down here, this resistance level then became support. So on this breakout here, or even the pullback to resistance comes support. But again, don't risk buy-in too high. Yeah, so it's just about timing your entry, having good money management. You can see this example here, lots of blue. I mean, these are the kind of scenarios you want where it's just clearly and obvious, and there's no debate where your resistance is there. It's clear resistance, very strong resistance. As I said, 1 hour chart time frame, so that resistance has been tested multiple times. It's held up well. In fact, resistance comes support. You can trade either the breakout, or you can do the more conservative approach, wait for the pullback and trade the pullback. There's a pullback there, pullback where resistance again comes support. No coincidence. Okay, ample opportunity to trade on this trend. Okay, traders are watching these levels. That's why you get these big breakout candles. Okay, an ample opportunity to ride this trend as the market continues to make these higher lows. Yeah, even if you took this first breakout trade, what, you're good for almost 400 pips. Stop loss just here, 15 to 20 pips, really tight for the 1 hour chart. And again, a trailing stop below the lows all the way up, locking in profit. And you can, of course, manually exit part of the position if you want, maybe close half of it or quarter of it, let the rest run, bank some pips. Either way, you know, with a tight stop loss, cutting losing trades short and letting winning trades run, we can have a profitable long-term trading strategy. When you see it chopping and changing color like this, best to just stay out of trouble. Hopefully you found something useful in this video. If you can like and subscribe, that'd be great and really help my channel. Don't forget to practice on a demo account to begin with until you start seeing some success. Get your trading emotions in check. Don't let fear, anger, and greed take over. Don't revenge trade. Don't force trades. Don't overtrade. And don't get FOMO, fear of missing out. Thanks for watching, and I hope to catch you on the next one. Take care.